Today's video is all about the 7 most common financial mistakes Americans make. Everyone makes mistakes, but let's be real, sometimes those mistakes can have serious consequences. Financial mistakes are probably the worst kind, and even though you'll probably make 1 or 2 of these in your life, you'll still be able to avoid making the biggest ones if you watch this video carefully and listen to my advice. So let's jump right into it. The first most common financial mistake Americans make in their lives is falling for scams and schemes. There are countless get-rich-quick schemes, be-your-own-boss traps, and subpar financial products peddled by unethical companies, all with hidden catches. Many people waste their time and money on get-rich-quick schemes without doing any further research. A simple internet search can help you figure out if something is too good to be true. Be cautious before committing to any money-related decisions. Make sure you are well informed on the matter at hand. The second mistake Americans often make is buying an expensive car. A lot of people come to me for financial advice after making the same common mistake. Even though they can just barely afford their monthly expenses, their car payment is several $100s per month. Many people believe they need to spend lavishly on a vehicle merely because they can afford the payments. However, later down the line, they have difficulty selling the car and end up in losses. You can finance a car if you need to, there is nothing wrong with it. But try not to spend more than 10% of your gross income on it. The third most common financial mistake Americans make is withdrawing their retirement funds early. Don't look at your retirement account as a piggy bank you can dip into whenever you want some extra cash. Depending on the retirement account you have, you may be subject to penalties and income taxes when withdrawing money. Keep in mind that one of the best things about retirement accounts is how they help your money grow. When you take money out, you're undoing all that progress. The fourth common mistake Americans make is financing purchases instead of saving for them. With so many companies offering zero-interest financing, it can be easy to fall into the trap of buying things you can't afford. If you don't already have the money saved up to pay for your purchase, it can be tempting to finance it and take advantage of zero-interest periods. Just beware that if you only make minimum monthly payments, the interest will eventually add up and end up costing you more than if you had paid in full up front. The fifth mistake Americans make is waiting to get insured. Often, people assume they don't need insurance immediately and push it to the back of their minds. The thing is, though, that's why insurance exists, to act as a safety net for when things go south unexpectedly. You never know when you might need it. The last thing you want is to be stuck with $40,000 in medical bills because you didn't get health insurance. And being the victim of a burglary without renters or homeowners insurance is a terrible ordeal. Make insurance a priority in your life by getting the coverage you need. The sixth financial mistake Americans make is carrying balances on their credit cards. Keeping a balance on your credit cards might not appear like an issue to begin with, but it can speedily increase out of control. In almost no time, you might owe $5,000 on your Chase card, $4,000 on American Express, and $6,000 on your Nordstrom card. The best way to use credit cards is by being a transactor. This means using your cards for the security and rewards they offer without ever carrying a balance. The seventh most common financial mistake Americans make is letting their debt go to collections. If you don't keep up with debt payments, the account will go to collections and damage your credit score significantly. Your score could drop by 100 points, and it takes 7 years for collections accounts to disappear from your credit file. If you manage your finances correctly, your credit score will gradually improve over time. However, a collections account can still haunt you long afterward. For example, when you want to buy a house or get a loan, the interest rates will be significantly higher. There's also a possibility that your application might be denied. Avoid these common financial mistakes, and you'll be on your way to building a strong financial future for yourself. Remember, with the right knowledge and planning, you can achieve financial success.